Well, Drew Wischhover is the owner of a title company that's based in the Midwest. Now, I do want to make a quick correction that we spoke about afterwards, is that I did mention at the end of the episode is that Drew can only do a title in the Midwest. That is absolutely not the case. He actually has affiliates across the country. So if you guys wanted to use him as a resource, this is an absolute value add. The title side of the business is something that we don't think about until we do get into a spot of bother. And, at the end of the day, I really do believe that having an understanding of all of the nature of the things that can go wrong and being dangerous enough to arm yourself with information on the title front probably could prevent an issue. And understanding that from the very beginning, it's quite often one of the things, like, you don't want to know that a seller is in financial difficulty and wants a particular number in the midst of a negotiation when you're very close to getting a deal together. You want to know all of that beforehand so you can resolve it beforehand. And Drew and I speak a little bit about that. We speak about the industry. We speak about when a claim is denied. We speak about why someone wouldn't insure in the first degree. We speak about so many different facets of what the title business is and what title means. We speak about the different stuff all across the country as well. So again, a really great resource for us to have in the Rethink Real Estate stable. So I hope you enjoy. Welcome to Rethink Real Estate. My name is Ben Brady, and this is a real estate podcast aimed to deliver sales strategies, marketing tips, and business insights from industry experts and myself to build a listing-focused business for the future. Let's get into it. Drew, welcome to Rethink Real Estate.
Thank you so much for having me today. Looking forward to it.
So, Drew, you represent a title company, and ultimately today we want to make sure that we don't say the word title and everybody scatter, because it's one of those things, like you said to me when we were off camera, is that not a lot of people really care about it until they do. And today I wanted to take an advantage when we had an opportunity to bring somebody in the title community on, somebody that obviously runs a company, somebody that has as extensive knowledge as what you do, to sort of give us an overall synopsis of what title looks like. Because I do believe that the agents that are on here listening at the moment, they probably don't have a deeper understanding of title as what they should when it comes to the transaction. And we'll get into that a little bit more, but a more broad scope question, because our business, we operate, our non-distressed auction business operates in about 30 plus states. So we get to see many different facets of it. You have attorney states, you have title escrow states, you have all different types of facets to all of this. So where you are at the moment, you are obviously a title state, but then you've got somewhere very close proximity that ultimately is an attorney state. What's the difference with all of that? And am I getting the terminology right or wrong?
Yeah, so I think, and again, I appreciate it, and you're right. There are so many things that are just kind of maybe misunderstood in our industry. Nobody cares about it because it's just part of the transaction, right? But you don't need title until you need title, and you don't know there's a problem until there is a problem. So I'm going to kind of just talk about a couple different factors that, terms that maybe, people kind of throw around a lot out there, and just kind of so make it a little bit easier for everybody to understand. So that, like you said, there are attorney states where the attorneys are a big part of the transaction. Then there are regulated states where you can go to any title company in the state, and the fee is the fee is the fee. It's kind of like workman's comp. No matter what you pay is going to be the same with that, with every title company. So a regulated state like Indiana, which is joining us, if it's a $250,000 policy premium, that fee is going to be the same no matter who you go to. Maybe some of the one-off fees where they are not regulated, those are the ones that the title companies kind of, can differentiate on. But an attorney state like Illinois, they control the transaction. So the seller's attorney is going to dictate what title company they're going to use. Right. And the big part of that is because the attorneys get a portion of that premium.
Right.
Okay. So we're sharing in that premium with the attorney. So they have a really big, interest in that client. So as the realtors, you guys are the kind of first touch point, right? For seeing these folks, and everybody is kind of like, all right, well, do you have an attorney? And if the answer to that question is yes to your seller, then in those attorney states, that seller immediately takes that file and is going to kind of dictate what title company he or she is going to use. Indiana, the exact opposite. The
Right.
realtor is going to say, hey, we're going to work with this title company over here because it's their brother, it's a family member, it's a friend. They've built a rapport with them. So a lot of the business that I'm doing, and we're a smaller boutique type title company where we don't have 1,000 employees. I mean, we're a shop of 8 to 10 people, and we put our leverage and our emphasis on customer service and working with the professionals. So partnering with realtors and partnering with attorneys is really where our focus has been. And really, I think the thing that a lot of people maybe misunderstand about title is title insurance is the only insurance that covers you for everything that happened behind you.
Yeah,
You think you might,
this is a good, Drew. You're really bringing up. This was really going to be my next question, because
yeah,
from a perspective of understanding, what are we insuring for? Like what like for those that, if we're bringing it right down to the basics, what is title insurance really for?
love it, love it. And I think that it gets confused often with homeowners insurance, where people come in and they go, I had a fire, and you get a phone call and say, hey, can my, can you guys cover this? Well, no. But we will cover if somebody comes by and knocks on your door and say, you don't own that house, I do, because my husband and I used to live here and we got divorced and I never signed off on the deed. Well, okay, that's a problem, right? So title insurance covers you for everything that has happened on that property behind you since the inception of time, since that thing was a piece of dirt. And what we do is we go through and we make sure that every transaction that has happened has been done properly and done correctly, so that we are ensuring that you are the rightful owner of that property. And so, as not exciting as that sounds, there are some horror stories that go with that the title insurance industry pays out on in claims every year. And they pay out
Yeah.
millions and millions of dollars. And you go, well, what can they lose on? I mean,
I was going to
how
ask
is
you
there an
some
issue?
specific examples that you
Yeah.
could give us of where stuff has gone wrong, because I'd love to hear a few of those horror stories that maybe you've caught or that you've seen people being involved in, so that people understand the emphasis of the moment, I guess.
Right, right. And this is why, the business of title insurance is not sexy, but it's fun and it's interesting because you're working behind the scenes and you're looking at, you know, the whole process of how this property has been owned from the beginning of time till now, your current transaction. And the items in the taxes, the encumbrances, which are nothing more than a lien, right? A mortgage is an encumbrance, a judgment is an encumbrance. So we ensure that you, as the new rightful owner, are occupying that property free and clear of any liens and encumbrances. So if the prior owner, they did some remodeling and they had some contractors working on the property and they didn't pay them. Now the contractor puts a lien on it, a mechanic's lien, and you come to find that you sell that property and now the new owner is getting this, these calls from the contractor saying, well, you owe me money. Well, no, I
Yeah.
don't owe you money. The guy before you, that's who you had to deal with. Yeah, but you own it now. And I liened the property that you live in. So therefore that lien is now yours.
Right.
That is where the title insurance policy would come into effect to pay that out and handle that claim.
How often is that missed, Drew? How often is that missed? Like, I think that's a really good one to sort of use as an example, is the mechanics lien element side of it. How often when you because I guess good practice, and again, please forgive me that I'm speaking in different terms here that might be incorrect. Like, it's
Sure.
called a preliminary title in California. It's called a title commitment. If you go to other states that you can get prior to the listing being active,
Mhm.
or title search, so to speak.
Right.
There's so many different ways that it can happen. And ultimately, good practice is to try and get that done prior to the property going live on the marketplace, so you're not dealing with an issue as it turns up in the midst of a good negotiation to then try and bring that all together and stall it. But I guess that how often is it missed was the original question.
Yeah, and I like that because I think that as you alluded to on the front of this, I think that that's the practice that we recommend to a lot of our clients and customers is, you know what, you're about ready to list that house, give us a call. We can do a quick little look through here so you as the realtor know what you're up against.
Yeah.
Because if you're up against a whole bunch of liens or a whole bunch of judgments, this may be a dead lead for you because maybe the folks, I mean, everybody claims they don't have any idea that that was ever there, right? I didn't know that was there. So we're just reporting the news. We are literally reporting the news of your property. So one of the practices that we really encourage our clients to is give us a call. It takes us a couple minutes to give a quick glance before you go list that thing so you know what you're up against. But to answer your question about frequency, it may not be just the mechanics lien that is the frequent, predominant event that's happening. It could be many of things, but where that happens is if people are, they're rushing through something, or they look at that and they say, well, that's old. I don't have to worry about it anymore. Well, you do. I mean, yeah, there's a statute of limitations, and it differs in each state. In our area, it's 2 years. So
Right.
if they didn't do anything within 2 years, theoretically that falls off. Yeah, but if they renewed it at 1 year and 364 days, it's brand new. It's got 2 more years on it. So people can make the assumption it's over 2 years old. I'm not going to worry about it, and they move on. Well, they renewed it, and it just took a little more time for the recording to show up in the recorder's office, and
Right.
therefore there's that gap.
Yep.
Okay, well, that happens, and that's why that coverage is so very important. But that's
Yeah.
I mean that's a little loss. I mean, talk about a tax lien. Talk about somebody else claiming that property, and I can give you
Claim the
more horror
ownership. Yeah.
stories.
Yeah,
You know,
yeah, yeah. I think that that's one of the, that's one of the things that, definitely comes to mind as well, is that there might have been a divorce and the transfer wasn't done correctly from a both parties' perspective. So I guess in that situation, when they've got a claim to the property in general, how does because title insurance is only up to a certain amount of money. It's not for the
Mhm.
entirety of the value of the home, correct?
No, not true. So it's actually there's two types of policies in title insurance. There's an owner's policy, which is
Yep.
for the person who's going to occupy the property, and then
Got
there's
it.
a loan policy, which is for the lender if you're borrowing money. They want to make sure that their lien is in first position
Yep.
and they're covered as well. So
Yep.
there's only two policies. Now, the the owner's policy is based on the contract amount. So if that purchase price of that house is for $700,000, that's the amount of the policy.
Got it.
Now, if that house appraises at 720,000, I mean the policy is for 700,000. So it doesn't necessarily, equal that, but it's typically for the sales price of the property. And so that's the maximum amount that could pay out. So if somebody claims after a period of time that the house is worth, 900,000 in the claim, you're only going to get 700. That's
It
where
covers you for your original investment and loss in that
correct.
situation, right?
Yeah,
I guess
correct.
that the other part is that the other part that I'm thinking about as well from an industry perspective, like title insurance went through this period, and again, forgive me, I obviously have an Australian accent. I've only been here for about 10 years. I wasn't here in the days that I used to hear about from the title officers that we have now, or the title
Sure.
reps that we have now, where it was you need to like I remember a gentleman who used to work for us. He worked for Fidelity Title,
Hmm.
and he literally said that if I didn't spend 10 grand a month on entertainment, I got in trouble. And then obviously the GFC happened and things like that.
Yeah.
That those type of things went away. Can you talk about the transition from what it was versus what it is now? Because I think that there's a part of this that I like speaking to somebody that has a boutique company. Obviously, you've probably got a service that is one of the larger aggregate companies, but it feels a little bit monopolistic. The industry, it feels,
Yeah.
it doesn't feel overly regulated. Oh, sorry, it feels overly regulated in a sense versus what it used to be. So again, I just love to get your feel from it in general.
Yeah, and I think what we see being the smaller guy, it is harder to compete as the smaller guy because to your point, we are underwritten by the big guys for First American, Fidelity, Stewart. So that's great. They allow us to, operate using their title commitment. So we can work under their kind of guidance and tutelage.
Yep.
And they're at our beck and call if we need them for clearance items and in questions and things. So when 2005 2006 came to fruition in the market crash, there was a lot of things going on that like it was just the wild west. People were these the people there was the flips, and they were doing these back-to-back closings, and then there was the straw buyers, and so they literally felt like they needed to hurry up, come in here and regulate and put things into place and put these stops in, and some of them good, and some of them maybe over the top, and then some of them were just kind of rules, but they don't really have a way to police it. And
Yeah.
and and I think that's probably the hardest thing right now that is still active today is some of the things that are illegal practices that are going on out there that are not able to be policed because it's really difficult to see that you are spending $10,000 on entertainment and you're buying those clients for somebody else, because the only way that becomes a problem is when somebody kind of blows the whistle on it.
Yeah.
There's not an underwriter that's going to go out, knock on your door, and go, "Hey, I see that you took out this client and spent $50,000 on them this year." I literally, in my sales team, one of the ladies who is of one of our top sellers was out trying to solicit business with attorneys or with realtors, and the question the realtor asked is, "What's in it for me?"
Yeah.
And she said, "Great service and all these things, right?" And he said, "Well, this guy over here just sent me and my family to Hawaii."
Yeah, exactly.
And I'm like, "Okay, so that leaves us as the small guy going, I can't compete with that. You know what?
Yeah.
Like, what does that mean?" And then when you call your underwriter and go, "Hey, this is what I'm hearing," and the underwriter goes, "Oh, okay," and it's nothing. That's like,
Yeah.
what am I going to do? So the practice is very, very cutthroat, and it's very, very competitive, and it's kind of like everything else in business. The big guy continues chomping up the little guys and absorbing them. But as being, and I'm thankful to say this, that I've been in business since 2006, and being able to kind of find my own little niche and kind of stay away from that mess.
Mm.
And I think that a lot of that is, the question I've always been asked in this business is, well, what makes you different than Chicago Title or
Yeah.
Fidelity? And
Yep.
I said I didn't have the answer to that, and I was really struggling with that answer, and I said I need to figure this out. So now my answer is nothing more than, every closing that we do, we give a portion of our proceeds back to charity and back to the community. So I have a not-for-profit that I started alongside my title company that we are doing, a lot of things in the community from the closings that we do. So that's my differentiator. And my underwriter is like, nobody's doing that in our area. What, like, are you crazy? I'm going, no, I want to be different and I want to stand out. I don't want to stand out for, sending people to Hawaii. I want to stand out for helping the people in the community. So
Understood.
that's
Well, again, local support means local support, so to speak. Yeah, I
amen.
think that's the keeping it all together is great. Now,
Yeah.
from an industry perspective, I'd love to sort of like round this out and have a conversation with you about what's the future development of the title industry, because there's a lot of people that have obviously, when crypto was going on at a very high rate with the blockchain, they seem to think
Yeah.
that the blockchain could be a really clear-cut way in order to modernize title, and modernize that portion of it. There's also now AI that is now
Yeah.
creeping into things that, from a clerical perspective, is that, at the end of the day, one of the largest data sources that they could ever give AI would probably be some of the, county records and things like that from a title perspective that ultimately could be modernized in that sense. Can you see any type of direction or any type of chatter amongst the industry of change at this point?
Yeah. Yeah. So obviously, we needed to stay competitive and we need to kind of stay on top of things. So we did that same thing, reaching into the AI circles of kind of scoping out, is there ways to streamline the searching piece? Is there a way to streamline some of the closing piece and things? And AI is coming into that, and they have not perfected it yet as it relates to like the county and the recordings and getting the search data that we need.
Yep.
But as somebody who's done this for a long period of time, there's a human element that still needs to look at things to maybe make the decisioning factor of whether or not that's insurable or not. And
Right.
and the human element is such a big factor of this, as well as, isn't this still a relationship business?
Yeah.
And that's, I mean, that's what I'm afraid of we're losing is, I mean, you guys are on the front lines as realtors. So you guys are with the people, and your industry has changed dynamically from people just buying by looking on the internet. Now they don't necessarily even, sight unseen. They look at a few pictures and go, that's fine, I'm good with it. But they find out that those pictures aren't really the truth.
Yeah.
So now what they have is not fact. They have fiction. And so I wonder, I fear that we're losing the kind of the personalization and the relationship base of what this business has really been built on.
Yeah.
But let's be truthful. I mean, real estate over a period of time always wins. It always does well. So if you can just ride out the bumps, you know, we went through 2005 and 6 and we went through that trauma and a whole bunch of things changed and we kind of hung on and went, okay, what's this going to look like? And here we are. And then COVID hit, we rode out that craziness because I think what COVID did is fast forwarded us probably 5 to 6 years just because, we had to do things, more from the distance and had to create ways to still close transactions. I mean, we became essential. We weren't left not to work. We were part of the essential group that was going to still go to work every day. So
Yep.
I think that what I'm proud of is we still adapt to all these changes and things, and they haven't figured out at least a way yet to kind of push us out entirely. I think there are some things that AI can do for us and can help us with our process, but I still feel the human element is a key player in what we're doing.
Well, I think that you actually triggered one final question that I want to do before we wrap up is that you mentioned the word, is this insurable? When would something not be insurable?
Oh, great. I love that question. So that question is personal. That question becomes personalized to the risk that you want to take. Because being a smaller company, I can look at something and go, you know what? I'm going to go ahead and take the risk that we're going to insure. We're going to go ahead and issue this title commitment and or policy based on the research we've done, the feeling we've gotten, the conversations we've had with the clients, with the people. I'll take a shot and say this is insurable. If I just brought that to the underwriter and asked for their opinion, it doesn't fit in their perfect little box. They're going to say, no, we're not going to do this. So we have that creative gene that allows us the ability to kind of go, yeah, you know what? That risk is so low. It's a risk, but it's still so low. I'm willing to step into that space. So he'd get that from some of the smaller guys versus the big guys who they don't think outside the box. You're a number. They're just kind of going, they're just passing papers, man.
Yeah, well, we have a situation actually internally in the company at the moment where it was actually one of the agents that did a flip property, and they're involved in it. They had a situation where somebody came back and claimed ownership, and ultimately the title company never insured them, and it was one of the big box title companies that will remain nameless, and they're currently going through a legal battle to prove that other side of it, and then obviously then they have to countersue the title company in order to actually get them to get the policy, and it's one of those things that I think that there's a part of this. I understand that there's a level of underwriting from your perspective, but like the experience that these people have gone through dealing with one of the big box title companies is that they legitimately just throw their weight around. You're not dealing with anyone that's spending their own money. They do not give, for lack of better terminology, any shits whatsoever about you, and they're just trying to outspend the problem.
Right.
And they probably spent 4 or 5 times on attorney fees than what they would have done if they just said yes to the policy. So
Right.
I guess that the question I've got is that when have you seen title insurance not pay up? Because obviously there's an element of just like life insurance, is that not every policy is
No, for sure.
granted, or paid out if something happens. So where do you see the denial?
It's when people bring claims to me, and then I bring it to our underwriter, and we kind of collaborate over these, and I give them kind of my background and my story to what we did through that transaction. Then they intervene with their research and their due diligence, and then there's a ruling, and that ruling is either yes, we're going to pay, or no, we're not. And if it's no, we're not, it's no, we're not because A, B, C, D, E, F, G. Like it's very factual.
Yep.
With like life insurance, there's some gray area maybe to what the insurance companies are not in the business to pay out, right? Same thing with title insurance. It's no different. However, with this, like this stuff is really very black and white. There's not a lot of gray area that we are dealing with. It's either that person does not own that house or that person does own that house. It's, it is very matter of fact, because when you take out all of the, smoke and mirrors, when the dust all settles, it just comes down to, was that transfer done correctly under the terms of what is making the term transfer, right? And that ownership is either correct or it's not. And I think that when they pay out, it's right. But I've been on the side of proving that no, that person is kind of filing a false claim on this because, they they didn't do the things that they needed to do on the front side. Yeah, they got divorced, and there's a deed out there. It's signed by the husband over to you. It just wasn't recorded. Well, that conveyed it. It just wasn't made public record. So
Right.
title insurance company goes, thank you very much, but sorry, no. So, we see both sides of it, and it's not no kind of lawsuit and claim is ever fun. Everybody loses. So, my number one goal is to keep us out of court, because at the end of the day, if you have to defend a claim, you're in the midst of spending money that it's useless.
Well, again, I think that this speaks to having somebody like yourself that's hands-on in the ownership of an individual business, that probably I would feel way more comfortable that I could call you versus actually one of the big box ones that are just going to throw their weight around in that situation. You're the boss. So
Yep.
I think that probably speaks to some of the, and I guess it's probably a little unconventional for a few of the ones that are, a few of the people that are listening in certain regions and areas where they might not have, a localized person like yourself. They probably only have the choice of a big box broker or big box title rep.
Yeah.
So at the end of the day, I think that that's a real advantage for a lot of people to be able to understand this portion of it, because people might be thinking, or they might have at the beginning of this episode, they're probably not listening now, but if they didn't think that this was appropriate, they probably rolled their eyes. But, imagine being caught in an absolute nightmare situation, not being able to speak to anybody that really is a decision maker or understands this as deeply as what you do. So Drew, thank you so much for being on Rethink Real Estate. I think you've really opened everyone's eyes up. We'll make sure that all of your information is in the show notes. You're in the Midwest. So at the end of the day is that anybody that's there needs to be looking you up and needs to be making sure that they're definitely using you from a title perspective. So thank you so much for joining us.
I appreciate you, Ben. Great time. Thank you.
So about 75% of our audience hasn't liked, followed, or subscribed to our podcast. It would mean the world to us, and it would help this podcast more than you know to expand our reach if you were to like, follow, or subscribe on any of the platforms that you're watching or listening on. Thanks again.